Thursday, January 7th, 2021, Maneco 64, home of alternative economics and contrarian views. So I've seen some comments this morning, recent comments on my video from yesterday about me looking at what happened in the US yesterday. And I was watching the crazy developments yesterday in the capital, in the District of Criminals, of course, Washington, D.C. I'm going to talk about that a little bit, but I will still focus on money and the markets and the currency, because that's, I think, the only way we can try to protect ourselves, our families, our close friends. We cannot depend on politicians ever. Not even in the United States, not even here in the UK. I guess I've been brought up, or I was brought up like that, because you couldn't trust politicians in Brazil. So my parents really were not political, and they laughed at politicians, and I do the same. But today we're going to look at the question of whether rising yields are going to lead to lower gold and silver prices. Yesterday, all the talk was that gold dropped sharply because of rising yields. But I remember I was doing the video yesterday morning, and the 10-year yield was around 102. It had gone up already quite a bit. And gold was, I think, around 1945, 1950. And after I finished the video, the yield kept going up. I think it went up to 105, and gold actually kept going up to 1960. And all of a sudden, it just dropped out of bed. And it happened around between 10 a.m. London and 12 p.m. London. So just around the time that the U.S. Market participants were waking up, just around the time the Federal Reserve was probably New York Fed, that, of course, who deals for the Exchange Stabilization Fund, just around the time they were coming in, and the market suddenly just fell out of bed. And yes, it's manipulation. It's called management of perception economics. They need to keep people thinking that there is no inflation. They need to basically kill the canary in the coal mine, or basically break the gold barometer. What's the gold barometer? Well, it's the barometer showing how the government, the central banks, are basically inflating the system like crazy to infinity. And I've just seen a headline here about 20 minutes ago that the Congress has certified President-elect Biden's win. So you've got a blue Congress, you've got someone who's not really there, probably controlled by the bankers, of course. We're going to see a massive inflation. We're going to see massive money printing. Yes, the Fed minutes came out yesterday, and it said that they were looking to, or they were talking in the previous meeting about tapering. Believe me, that's just there for mope or management of perception economics. The Fed cannot do that. The Fed can only keep inflating. We know how much debt there is to finance this year, especially in the longer end of the curve, like from 2 years to 30 years in the US. They're not going to be able to do it by just rolling over T-bills at low rates. So they're trying to keep things from getting out of hand. The commodities are still really strong. So before I go to look at the markets and also talk a little bit about what my view of what happened yesterday in Washington, D.C. is, let's look at some comparisons. I've got here two charts, and they're 1 hour charts. The top chart is gold, and the bottom chart is the 10-year yield. And you can see that, and this is New York time, it's not my time, but you can see that gold has been going up ever since the 10-year yield has bottomed here. and it kept going up. And even after the 10-year yield started going up overnight yesterday, and gold kept going up. So is it really because the 10-year yield went up that gold went down? I don't think so. And the reason why I don't think so is because notice how they started doing that just before the U.S. came in, or as the U.S. markets came in. And by that, I don't mean the 9:30 a.m. New York Stock Exchange open. I mean like 7 a.m. Believe me, the people on Wall Street, they get in the office around 7 a.m. I used to deal for a really nice guy at a major bank on Wall Street from London, and he was there very early. He was calling me around midday here, or just a little later. So he was getting to his desk early. And the other thing people need to remember, U.S. Treasuries, they don't start trading when the U.S. comes in. London is a major center for U.S. Treasury trading. So the yields have been going up all throughout the morning here in London, way before the U.S. came in. But the Fed and the Treasury, they couldn't have gold up there with yields up there. So they had to smash gold to basically tell people that everything's fine. We're going to be able to like keep printing, keep monetizing the debt, and gold is not going to be a problem. But I personally think it's going to be short-lived, this drop in the precious metals, especially in gold. So the other chart I wanted to show you to disprove this argument. And the thing about this stuff, this mope, is that you start seeing people on Twitter and everywhere saying, oh, gold dropped because of a 10-year yield. And they don't really do their homework, and they just spout out whatever someone says. But this is a longer term chart. It's from the beginning of 2020 or towards the end of 2019. And you can see that the top is gold. So gold has been going up for the last year. Yes, it's below the highs from the summer. But if you look at the 10-year yield, it dropped intraday to, I think it was 0.3. But during the crisis, or just after the crisis, we got down to around 0.5%. And it's been going up ever since. Look what gold has been doing. It's been going up ever since. And yes, as I said, we've come off the all-time high. But the bottom in gold during the crisis last year was around 1450, I think. I'm not too sure. And now we're at 1900. And the 10-year yield has gone from 0.3 to 1%, just a little more now. And gold has actually gone up as well. So in the 1970s as well, we had rising yields and we had a rising gold price. Yes, people seem to associate rising yields with the fact that it's going to make it less attractive to have gold because people are going to get more return on their treasuries. But I would say with the fact that the Fed wants to keep rates near zero and they want to keep inflation running above 2%, I think these 10-year yields are still going to be in real terms negative. So, and that's why gold is going to go up, and silver as well. And as you've seen here in the last year, it hasn't really, how can I say, been the case that the rising yields here in the 10-year has resulted in a lower gold price. So, and now especially with the trifecta of globalist stronghold in the U.S. And what do I mean by that? Globalist stronghold. Well, they're in charge of the U.S. government. They've got the executive, they've got the Congress, Senate, and the House. And even if Trump had won, I think they'd still be pretty much in power, the globalists. We've seen that the Republicans and even the vice president have really stabbed the president in the back. Reminds me of Julius Caesar being stabbed, literally, of course, in the Senate in Rome by Brutus. And he even said, "Et tu, Brutus," and you, Brutus, as well. So, "Et tu, Mike." So that's how I feel about yesterday. I think there were like over 1 million Trump supporters in Washington, D.C. I think the 99.9% of those people were peaceful. They weren't even near the Capitol. A lot of them had just gone to listen to a speech by Trump. I think it was at the Washington Monument. I'm not sure where the speech was. Maybe you can correct me. But from reading and looking at what went on, and I was following it. And there's a picture of a guy. He's got his paint faced and everything. I think there was a lot of agent provocateurs to make the million peaceful protesters look bad. And unfortunately, there's someone that was shot dead, a lady that was shot dead. That's pretty bad. Yeah, it's crazy. I'd never seen that before in the U.S. I think even during the Civil War election, there was an election in 1864. I think there was a peaceful transfer of power. Of course, they assassinated President Lincoln a bit later. But yeah, this was kind of, yeah, there was trouble transferring power. And the other thing about Mike Pence, he took over, I think. And I've just read that Twitter is banned President Trump from tweeting for the next 16 hours or so. So I saw someone tweet, I think someone from Bloomberg, like one of their analysts said, you know, he's got control of the nuclear button, but he can't tweet. But I would say he doesn't have control of that button either. I think Mike Pence is in charge right now, really. Mike Pence, I never really trusted that guy. So there you go. It just goes to show how tough it is to clean up or drain the swamp. And unfortunately for the rest of the world, for those of us who like freedom and small government, it's a dark day, I would say, the last 24 hours. And I'll leave it at that. And as I said earlier, we need to focus on looking after ourselves, our families, our health, our close friends. And I consider you guys who watch my videos close friends. Of course, haven't met 99.9% of you in person. I've met a few of you in person, but that's the way I feel about it. It's a community. And even though it's a virtual community on the internet, that's the way I feel about it. And so with that, we're going to look at the markets this morning to see where we are. As I said, I just saw a headline that Congress is certified. And it was funny to watch in the Capitol, the politicians running like little children, really scared, some wearing bags on their heads. Really, really weird, I would say. But anyway, it's 9:15 a.m. London. Yes, gold right now is up $2 at 1920.50. The high's been 1928 and the low 1914. Yesterday, I think we got right down to 1900 and the market rebounded. Silver held on quite well. Silver was got up to almost 28 before they came in to manipulate the markets. Got down to like 26.80 and it started catching up and going back up above 27. It led the rebound. So that's kind of encouraging. I also noticed that the portfolio of mining stocks that I have actually went up yesterday. My holdings of mining stocks. I noticed that big miners like Newmont, which is one of the stocks I have, actually went up. So that was encouraging. Silver's at 27.18, is down 10 cents. The high has been 27.38, the low 26.90. of course, with all the mayhem going on, the Dow is making new highs. The Dow future, we got up to above 31,000 this morning. Right now, we're up 120 at 30,950. S&P is up 0.5% at 3768. NASDAQ, of course, is up 0.75% at 12,700. What about the currencies? Well, the pound is at 136.04, unchanged. The euro is down 0.33% at 122.85. The dollar is up 0.4% versus the yen at 103.45. And what happened yesterday as well, once they came in and bashed gold and silver, you saw the dollar afterwards strengthening, right? So that's what they do as well. They try to control the dollar, the fact that it's really melting down. I noted yesterday as well that commodities were very strong. And that hasn't stopped because high-grade copper is back up near the highs here. Crude oil, WTI, is back up above 51 now. So I wouldn't be concerned. I was reading yesterday the Endgame Investor. I get his updates. He's put me on his list. I've interviewed him twice. I recommend you go and look at him. He's very interesting young guy. He's in Israel. He's originally from Miami in the US. But he's been in Israel for years and he's got a young family. And he was writing about hyperinflation. And I think that's what we're going to get. And one thing he said about hyperinflation that's really interesting, and he quoted Rothbard and one of Rothbard's book, which I actually haven't read. I've read a couple of Rothbard's book, and he says about hyperinflation, right? And I'm going to read here from his report. It says, that point is only reached when the alternative is suicide or something close to it, because destroying the money is basically society tearing the entire division of labor down as the only way to stop the systematic theft, which can no longer be tolerated. So what's this systematic theft? Well, it's the creation of money out of thin air. It's the bankers and the politicians and their cronies getting access before you get access to that funny money, so they can really buy assets for nothing with this fraudulent paper. And he says this point was made clearly by Rothbard in Man, Economy, and State, where he described hyperinflation not as a tragedy, but as the last line of defense a society has against a thieving government. I'm going to try to get a hold of that book, Man, Economy, and State by Murray Rothbard. I'll put a link below in the description. And just to finish off, he quoted Proverbs chapter 3, verse 25. This is Rafi Farber from the Endgame Investor. As it pertains to what's going on today, the fact that we're living under authoritarianism, not only in the UK, but the whole of the EU, in the US now, of course, he says, do not fear sudden terror or world domination plans of the wicked when they come. It will always, and this is what Rafi thinks, it will always consume itself before it ends the world. Just get out of the way as much as you can. The end of every single empire in the history of the world is bankruptcy, 0 exceptions, and never will there be any. So I'll stop here for the day. If you enjoyed this video, please hit the like button. Make sure you share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.